General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's see what they talking about on the news. Yeah. Warren Buffett, weak labor, Iran. All right. It's no longer a thing. Quantum is no longer a thing of the future. Oh, yeah. Quantum is popping. Okay, let's see. One day we can press. Just NASDAQ. I was thinking about UJ because just a beautiful chart. But I'm still thinking about it because it's like I'm just so used to watching so many things. So today just pushed off Asia, London, New York. Tried to get London high, but didn't get it. Then lunch and PM stayed inside New York. It wasn't no big, detrimental stock news or whatever on those headlines. It was just like quantum. Last day of the year is we gotta look out for profit taking too. Overnight session sold off, and New York tried to recover, but failed. New week opening gap. We're in discount on previous week's range. No real arrays. I would be worried to even put too much emphasis on. I don't like this. I don't like these wicks here. I feel like that's unfinished business and it needs to get cleaned up. Mm, Mile markers, I'll watch previous weeks. EQ. Put 50% in the work. Lock that. Make sure it's not everywhere. Okay. Inside. Center that'll work. Put it on the bottom. Okay. We'll lock this. No weak opening gaps. Interesting. That's a large Monday too. Previous days high, previous days low. I'll be watching. But so far, we're just rebalancing. I don't see anything interesting. This is kind of interesting. What is this? Thursday, Friday gap? It opened here. This is like right where we hitting it at, that gap. This is the first time hitting it, huh? Since it's been created. So we can reaccumulate, try to go back through it. See the daily. Okay, yeah, I don't need that on a 4 hour. Alright, here we are on a daily. We needed to close above this old high, but we didn't. This is still our invalidation, and we still do have this new week opening gap here that needs to be dealt with. Okay, it's locked. That's a weak high too. I still like buys here. I even like it even more because we sold off to start the week. That makes it for a better swing. Yeah, I say the framework played out. What do we learn about ourselves? Just take it one day at a time. Compounding is the focus. What will I watch for tomorrow? What's the news tomorrow? I think it is FOMC minutes. Yeah. I would like to buy under Monday's low. I like sales for Tuesday just to previous week's low. And I'm going to see buys. If we just start buying, then that's going to leave Monday's low for the target later on in the week. So, good thing we got 2 buttons. Today is the 29th. All right, that's that on that. Y'all have a good day. Peace.